Okay, now we'll be continuing. This is going to be Principles of Accounting 1, Chapter 1, Part 2. Summarize the development of accounting principle and relate them to practice. Financial accounting follow generally accepted accounting principles, which is called GAAP, in preparing the financial reports. Within US, the Financial Accounting Standard Board, that is FASB, has the primary responsibility for developing accounting principles. So the principle which has been followed in America is Generally Accepted Accounting Principle, GAAP, and the organization which is responsible for developing them is Financial Accounting Standard Board, that is FASB. Okay, this is the first important accounting concept, business entity concept. Under business entity concept, the activity of a business are recorded separately from the activity of its owner, creditors, and other business. Let me elaborate on this. Let's take an example. There's an individual who own two businesses, one of farmhouse and other of travel agency. This individual also has his personal belongings. He has a car, he has a home, a personal bank balance. Can I can uh, can we have one income statement, which shows how much is being earned, how much expenses have been incurred for the farmhouse, and travel agency. And let's say this individual who owns this personal two businesses have a part-time job as well. So can we make one income statement for all of them? No, we cannot. Why? Because if we do so, we'll not be able to know which business is profitable, which is in loss, or which is making more profit, which is making less profit. Why? Because we have put them all together. So business entity concept requires that we need to have separate income statement for the farmhouse, separate income statement for travel agency, and separate income statement for the owner, for the personal belongings. Same goes with the balance sheet as well. So we need to have separate balance sheets for the owner, for the businesses, separate balance sheet for travel agency, and a separate balance sheet for farmhouse. Okay, we have three kinds of business organization. One is proprietorship, in which we have just one individual owner. Then we have partnership, in which is similar to proprietorship, but in this case we have businesses which is being owned by two or more individuals. Then we have corporation, which is organized under state or federal statutes as a separate legal taxable entity. And then we have a limited liability company, which combines attributes of partnership and corporation. Okay, now users of financial statement, internal or external. Okay, management, is it internal or external? It is internal. Then we have shareholders, are they internal or external? They are external. Then we have potential investors, they are external again. And then we have lenders, these are external again. And then we have suppliers who are external again. Similarly, customers are also external to the organization. Employees, they are internal. And we have competitors, they are also external. And finally, we have government agencies, they are also external to the business. Okay, under the cost concept, the amount are initially recorded in the accounting record at the cost or purchase price. Let's take an example. We have purchased a land for 1 lakh, After 10 years, we are going to show that land at cost, although the price may have gone tremendously high, the current market price. But we are not interested in the current market price. The cost principle or the cost principle tell us that we need to record the asset at the initial price we have purchased at. Then we have objectivity concept or objectivity principle. It requires that the amount recorded in the accounting record is to be based on objective evidence. That means we need to have a proof, a documentary proof for making record or making entry in our accounting records. What is the proof that you have paid the fees? Is the paid fee challan. So paid fee challan copy would be required by the accounting department of Behriya University in order to record that such and such students have paid their fees. Okay, the only final agreed amount is objective enough to be recorded in an accounting record. Let's say you are making a transaction, you want to buy a land, and the buyer is demanding 1 lakh. You have offered, let's say, 60,000. So now there's a negotiation between buyer and seller, and let's say the final agreed price between the two parties is 80,000. So 80,000 is the amount which is objective enough to be recorded in the accounting records. Then accounting, then the unit of measurement concept. Unit of measure concept, or we call it monetary unit assumption. That is, it requires that economic data be recorded in dollars or in currency. Well, this means that in accounting we can only record those events which can be measured in dollars, which can be measured in rupee, which can be measured in any currency. If an event cannot be measured in currency, so that it cannot be recorded. So let's say, take the example, you have purchased certain item from a shop, you have been issued a bill, you are making payment. So that is something which will be recorded in the accounting record. But let's say a director resigns from an organization, a key director. So the profitability of that company will be affected in future. But since that cannot be recorded in dollar terms, in rupee term, resignation, so it will not be recorded by the accounting department. Okay, now we'll be talking about state